platforms. Okay, so we have started the streaming here. LinkedIn Trading View. So there's a lot of streams going on. Let's see how the system holds this.
Recording in progress.
Okay, so even though the audience is a little bit less, let's start off this discussion. And before moving any further with the discussion of the charts, let me start with the very small disclaimer here on screen suggesting that all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here, you yourselves will be liable for any profit loss or loss of profit. With that being said, we'll just proceed in the regular way. First of all, I'll give you a small introduction. Then we will start off with the charts of crude oil, followed by gold, S&P, Nifty, and if we get time, BTC, and maybe some other charts. And before we proceed, just give me one final yes from viewers on whichever platform you are viewing, even in the private group here, that the screen is visible, dark screen, dark background screen, and the audio is loud and clear. Okay. Thank you, David, for the confirmation. So let's just start off and give you a small introduction. So my name is Nirav, and I have been conducting these applied Elliott Wave webinars since a good few months. This is the 33rd in the series of these applied Elliott Wave webinars. As you can see, till 32nd we have done so far. So, and you can check my track record of these webinars, which I've been compiling over the years by going to 50years.com/forecast accuracy. One more important thing I wanted to point your attention: the 2021 what do you call compilation has already been done, and it makes it 6 years, as you can see, of me having these accuracy. Oh, okay. So I have to edit this to it to small error there. Anyways, so it has been 6 years. Okay, got it. 2021, 2020, 2019. It looks like there is a small error I have made in posting this. Somehow the 2021 has been replaced by 2020 and 2019 by 2018. Not sure how that happened. But nevertheless, I will correct it in time. The system seems to not be able to go forward with these multiple streams. I'm facing some. Okay, it's a latency issue. Can you confirm again if the stream is visible or what's happening there? It's good. Okay, so let's proceed. What I wanted to say was our 2021 accuracy has been compiled. I will update. It looks like by while posting we have made a small error, but nevertheless the accuracy is still above 80%, and now we have 6 years of track record for these accuracies, which I believe is phenomenal, and I have personally not seen anybody else having a public record. Yep, David, it's still good. And on a personal note, I checked my own trades and forecasts, which I do in my Slack private group for the months of December and January, and it was almost like everything I've posted worked out. Very profitable months, and privately our accuracy was, believe it or not, it was almost 100%. So that's one thing good happening there. Again, I see that the stream seems to have disappear at points. Let's retry. Okay. If there is an error while broadcasting, please do let me know in the comments. So let's get ahead. Enough of the introduction and the accuracies. You can check all that. I also have an emailing list if you want to remain updated of whatever I'm doing, and a video course if you want to learn from me, and a training program. More on that later on. Let's get to the matter at hand, which is the chart of crude oil. Because as we know, the Russian markets and the crude oil markets are very strongly related. Most of the major stocks in the Russian index, which is RTS, are basically crude oil based companies. So what happened? Let me once again just load up quickly the chart of RTS. So what happened on the day when the war broke out between Ukraine and Russia is that the Russian index, it fell about 42% during the session, but before the session closed, it made a recovery and it was, I believe, around 21 something percent. Let's quickly check that. Yes, so roughly 42 point something. But before the session could close, the loss was about 30% only. So 12% it got back from the bottom, more than 12%, obviously. But the point being that the next day also we seem to have an inside bar. So the confidence or the interpretation we can take from the market at this point is that seems like the things will not go very far in time, which will be good for everybody. But again, let's go to the main chart, which is of crude oil, of course. So in this chart of crude oil, which is a 15-minute chart, let me just squeeze it a little bit. Let's go to the CL1, which is a crude futures chart. And let me try to show you what is happening on the longer time frame. So on the longer time frame, if you can see on screen, we have a wave 1 over here. By the way, can you see my drawings or even that is lagging? I have drawn something with a green color. Let me know in the comment section. Okay. So as I was saying, we seem to be having a wave 3 and wave 4 and wave 5. Okay. So the whole pattern is complete. The just I want to give you is, instead of showing you the whole detailed analysis, is that the fourth is complete over here, and now we have only left with two possibilities. Either the 5 is complete. If the 5 is complete, then the reversal will happen in crude oil, right? That's the first possibility. Second possibility is that because this is a commodity and commodities tend to have an extended wave 5, which is the which is coming from the reason that commodities are generally driven by fear instead of greed. So fear acts out in wave 5, and in case of stock markets, it's driven by mostly greed, and that acts out in wave 3, which is the middle part. So it would not be unlikely to see an extended wave 5. And although we have an impulse complete at this point, that could just be wave 1 of wave 5. So basically, if the wave 5 is complete, then we can see new downside movement from here. And the secondary possibility is that the wave 5 is not complete over there, that is just the wave 1 of wave 5, in which case we will just see a corrective pullback over here, right? And now the thing with corrective pullbacks is they do not require to be very big. It could be a very small pullback, and then the new leg to the upside will begin. So that is the second scenario in mind, right? So based on this, we can simply hypothesize that if we see a break of the last high or a move near the last high, then we can look to reinitiate long positions in this market, right? Otherwise, we are not really interested in longs. So basically, we are waiting for the market confirmation move near the highs or above the last high is what we will look for longs in this counter, right? Secondly, the situation with the war generally is that things like crude and gold, they generally jump up, right? That's generally the scenario with these kind of situations. So if we look at it from that perspective, if we look at it from that perspective, where is that? Let me go to the intraday view, 15 minutes chart or something. So one thing to note here, this is the chart of crude oil futures, CL1, as you can see on the top left on NYMEX, right? Now I'll be jumping to a chart of CFD contracts. And the reason is that I'm just following both of them and it's sometimes easier. There will be a small difference in prices, so I'll just point that out here. First thing, on the futures chart, you can see that the market touched 100.34 something, right? Don't need to be really precise, but it just tried to test the 100 level. But on the CFD chart, you will see that it went to something like 102. That's because these two things have a small difference in general, right? So, but because we have the shorter time frame analysis over there, so let's head over there. So here you can see the 15 minutes chart. Let me remove everything that I've drawn so far. And on this 15-minute charts, you can see that when the war broke out, the market jumped suddenly and went to 102 on the CFD, which was actually 100 on the futures chart. But later on, there was a strong sell off, right? Not only was there a strong sell off, it even broke below this important yellow channel, which you can see over here. Let me try and squeeze it on the hourly chart. So yeah, there was a strong sell-off which took this market lower than this all-important trend line, right? So what this trend line basically is representing is that it is representing the fact that this impulse, which started from this point around 62 something, is most likely complete. A break below this trend line is suggestive that a correction is in progress, right? So if the correction does proceed, as we discussed on the larger time frame chart as well, then that is again a secondary indication that possibly the thing with this war situation may not last very long, right? So that is our interpretation of the higher time frame and lower time frame of crude, and we also try to put it into perspective along with the war situation. Let me know if you guys have any queries in regards to this particular chart. If not, then just type in clear in the comment section and we'll move forward. David, Rashid, and other participants who have joined. Harold has joined. Let me switch the Wi-Fi there. Okay. And Himanshu Sagar has joined on TradingView. I am not seeing the chat of YouTube, so I might miss a few comments if they come via YouTube. So, anyways, it looks like everybody is clear on what we discussed. A little bit more participation would be nice, but since we have received yes nod, let's move on to the next chart of gold. So the situation with yeah, by the way, I'm not checking the forecast I made for crude in the last meeting, but it worked out from what I recall. The analysis was rather very clear and straightforward. So now, okay, so in gold, the last analysis I remember was that there were two scenarios. One was that this whole move, which started from this point, was a triangle, something like an A, a B, a C, a D, and an E, right? And as we know with triangles, the thing is that once the triangle is complete, we can then see a move which breaks the BD trend line of the triangle and the market will move upside, right? So if we look at that analysis or from that perspective, then the BD trend line will be this one, right? and since it is already broken, a long is already triggered, and we had already discussed the long strategy for this market, right? So nothing happening new over there, right? Although this trend line is incorrectly drawn, it should be A and C. So anyways, leaving that small technicality, what we have already is a long which has been triggered, right? And now that the long is triggered, let's just quickly check what was the trigger point we had placed previously for this chart. Again, an issue with the stream. Can anybody confirm if the screen is going black at your end? It does look like it's not able to handle these four streams which are going live at the same time. Okay, so I'll proceed then. So this is the long setup. Our longs were placed near the wave D high, which is around the levels of 1864. And as I had updated in my private Slack group, we were able to catch this entry, right? But this is just one of these multiple scenarios. So this scenario suggested longs, but as you can see, there is already a big sell off here. So that demands we take into perspective the second scenario. So second scenario will be called hypothesis 2, and the first which is being discussed is hypothesis 1, let's say. So in hypothesis 1, if this market is following this count, then we should not see a break in this price region, which is what do you call below the wave D low, or basically the wave E region, right? If we see market moving again in this region, then that's a sign that this is probably not the count, right? It can take a support on this trend line, the BD trend line, but trading below it for a longer period of time would be a sign that this is incorrect analysis. So that's one point to note down, the way we will invalidate one of these multiple counts. Okay. Second thing to note down is the second scenario or hypothesis 2. So let's discuss that. So in hypothesis 2, if you can see on the chart in CN or this bluish color, we have a wave W which is marked over here, right? And an X which is marked over here. So if the W is complete and the X is complete, then the Y will follow, and wave Y is generally, not generally, in this case, is to the downside, because that is how the pattern for this market really is. So if wave Y is going to the downside, then that means the hypo 2 is suggesting bearish movement, whereas hypo 1 was suggesting bullish movement. So as you can understand so far, both views are completely contrary, right? So the longs which were already in, they already have seen a big drop, and technically this position is not something you should keep holding right now. If you want to re-enter longs, then re-enter them near the break of the high again, not right now. So basically the situation is gold, in gold is wait and watch for now. We have two hypotheses and both are pointing completely different directions, right? So if somebody is to relate it again with the international situation, generally speaking, there are, again, as I said, multiple factors which can take place, but generally speaking, what happens is during situations of fear and war, people like to invest in commodities such as gold, right? So generally speaking, you can expect a move in the upside direction, but again, these relations are a generality, not a 100% correlation or a fact for that matter. So as I said, in gold, no new longs for now. The longs which were entered, they should already be booked, if not already booked, right? And we can look for shorts, as I said earlier, below the BD trendline break. So very clear trading wise, decision making concepts are rather clear. I have two, three more counts on it, but it will become way too complex. So I'll just keep the discussion to these two main counts, and they do deliver the whole situation rather clearly. So anyone in the comment section, kindly clarify how much of it you understood. If there is any question on gold, If not, then we can simply move on to the next chart. Yeah, they generally follow each other, David. Silver and gold. So, okay, I believe everybody is clear. I do not see any questions. So, we'll now like to move on to the chart of S&P's 500, right? So, this one has been interesting. Let me load the bigger time frame view so that I can deliver the whole point. Okay, that should do. So on the chart of S&P, our point of reference is around this level of 3182, right? So basically this is our point of reference. Let me hide the stuff. This is our point of reference. Again, there's another view here which will increase the complexity of this market's analysis, but it's not really serving us anything trading wise. So that's why I'm going to avoid discussing that. What I see so far on this chart of S&P is that we have one leg up over here, correction down, and a new move in the upside. Yes, yes, David, they are definitely volatile because generally corrections are accompanied by volatility, and that is what these markets are playing out as of now, specifically the indexes, I mean. So, anyways, getting back to this chart discussion, wave 1 is complete, 2 is complete. Just follow the count from this point around 30 to 36, right? Ignore the parts on the left and whatnot. From the circle point, this is our point of reference. So what we see so far is the wave 1 is up, 2 is down, and then the wave dot 3 is again up complete, and wave 4 is the one in question. So without checking anything or further details, we know for a as a guideline that wave 4 generally end in the wave 4s of one lesser degree, and here you can see that the wave dot 4 is over here. So if the wave dot 4 is over here, so generally you will expect the market to go within this price range and then reverse. So the bare minimum, as you can see, has already been done by this market, right? As a matter of fact, if I draw a straight line, let me just remove the counts for once. So you will be seeing a bit of lag, but I can't do anything about it. It's coming because I'm streaming at way too many locations at the same time and also recording a copy via Zoom. Anywho's, getting back to the point, as you can see, this was the wave 4 of one lesser degree. The market literally came and touched this low, right? It touched this low over here, and then it tried to break below it, but it was a spike. So there was strong buying coming in, right? So the general guideline for the wave 4 is already complete. Secondly, this leg from the top of around 4800 something level. One second. So from the 4800 something level, we already seem to have a corrective leg complete. By correction, I mean basically a three wave movement in the direction counter to the main trend. So we have reason enough to believe that theoretically we have a good stance here, suggesting that new longs are in play, right? That this wave 4 is over here complete. However, keep in mind that the wave 4 guideline of going to the wave 4 of one lesser degree is just a guideline. It's not required to be followed by the market ever, right? And specifically in a scenario like this where we have a big international situation, things can go berserk real fast, right? So technically speaking, we have reason enough to believe that new longs are into play. But on the other side, I'm not really very satisfied with this leg down, this last leg down. It does seem to suggest that it's not a leg down for the completion of the correction, but rather the part of a bigger correction, something like this. If you may understand, what I'm really proposing is a correction of the sorts of, let's say, an A, B, C, where this wave B is still continuing and is going to the upside, right? So, as I said, because the situation is like that, if the situation in general was at what you call peace, then we would have preferred to count the whole thing complete over here, and we would have liked to believe that new upside is in play, right? However, considering the complexity of the way things are, one alert should be posted over here, which is not exactly the low, but around 4216 levels, right? If the markets comes back down here, then we will like to give priority to this bearish count wherein A up, B flat, and C is in play, right? So this level will suggest to us that we need to take the downside more seriously. Until that happens, we can assume that the downside may have completed already near 4100 levels, right? So these are the two main views. The setup for downside will only be activated around 4200 levels, or below 4200 levels we'll look at it again for the downside thing. But on the same time, we are aware that the technical correction is already complete. Yes, it is, but that would also mean that probably the situation is not settled between Ukraine and Russia. So that will be the view for 4000 level, David. So I believe I have discussed all the possibilities on this chart from multiple different angles, right? So if we conclude all gold, crude, and S&P, which we have discussed so far in sequence, then right now, as we saw on crude oil, that the possible impulse down or one impulse down is already complete. That was on the CL1 chart. Let me show. So one impulse down is already complete over here around 100 level, right? If that is really the case and it's not the wave one of the wave 5 but the actual wave 5, same goes for gold. If the gold is also in the wave WXY formation and this is the X and not the break of the triangle, and also the S&P's move is complete in the correction and is now going to move up, then we would say that this is a situation which favors that a treaty of peace will be signed up between Russia and Ukraine. That will be the ideal scenario, right? Similarly, you can view the counter thing. If the situation carries forward between Russia and Ukraine, then we'll probably see that the crude oil charts will again make a new high above the last high of 100, right? Gold would continue rising up. That's just a hypothesis, but we discussed that one in detail. And it would be the break of the triangle situation and not the WXY continuation. And same goes for S&P. The downward movement will continue based on the count I just discussed, right? And then we can see 4000 or maybe lower levels. So I believe that's quite a detailed analysis for these three things, also keeping in mind the situations abroad, right? Let me know if you guys have any query thus far, including S&P chart or whatever charts we have discussed before it. If not, a yes will be nice to see in the comment section. What about the guys at Trading View? I can see that some people have joined in, not a very big audience, but comments from that end are also viewable to me. If you guys want to put any queries, you can. In the meanwhile, let me just quickly check YouTube and see if there is any comments coming from YouTube itself. Okay, we have some comments over there as well. Yes, it also depends if the Ukrainian government decides to surrender. That also will end the whole issue. But so far, it does not look like they are interested in surrenders. Yes, Art. We will look at BTC next. So BTC has been very complex. We have been following it on shorter time frames, and it is quite complex that we can just discuss this whole chart for another hour. But we do not have the luxury of time like that. So I'll just discuss the main views that I hold on this chart. So first of all, again, I'm not looking at the past analysis I did on BTC. The reason is that I am streaming at so many locations that I believe if I open one more tab, this thing will not work out. So what we have on BTC so far is the view that this point around 65,000 something, yeah, 65 100 something, I believe, or 65 13 is our point of reference. And if this is our point of reference, then we were assuming that this is a corrective down, corrective up, followed by a possible impulse down. That was one of the major views we had on BTC for quite some time. Another views like triangle and complex are always there, but let's look at things from a simplistic perspective. So in this corrective view, we would expect this market to be in the wave C formation. Again, some lags there. Okay, so if I try to draw there, there seems to be a lag. So I'll just post some lines here. This looks to be the wave A, this looks to be the wave B, and this lag down is what we are assuming is the wave C. Now, if this is the wave C, then I'm of the assumption that this could be a diagonal formation with wave 1 down, a wave 2 up, a 3 down, and a 4 up, and then the fifth down, right? That will be what we call a ending diagonal, right? And for an ending diagonal, we need a wave 1 and wave 4 overlap, which you can see is already there, right? So this is your 2, this is your 3. Sorry about the bad drawing. As I said, there's a lot of lag because of this streaming thing. So I have to just make do with what we can. So if this is the real count which is being followed by this market, then as you can see yourselves, one leg down is remaining over here, right? If this one leg down is remaining over here, then we will obviously see a correction possibly at this point, and then a down leg, or possibly even a straight down leg if the movement is extremely bearish. So at this point in time, my view or take on this market is that this diagonal formation does hold rather well, right? And the situation of Bitcoin and how it fits into the international situation is not very clear. Some people hold the view that because this is a currency which gets used all over the world, is decentralized, then it should be good for Bitcoin that there is a unrest among international governments. Yeah, one more important point. I believe some of you already know that the Swift payment method has been blocked for Russia. Generally, Swift, basically the international transactions are done via the Swift payment method, which is used among banks, right? And if they are being blocked because NATO and US, they both decided they will put trade restrictions and other things. So if payment method which is used to deal money between banks internationally is blocked, then it might suggest, just might suggest, that Bitcoin might see a trend because of this negative international unrest, right? So again, that's a long short assumption. I'm not really sure how widely Bitcoin is used in Russia, how wide is the penetration over there. But that's just one plus point. It does not seem to reflect on the chart so far, right? So it's just a fundamental thing which people like to talk about, right? I'm seeing something being typed in. Okay, so while there's a comments being coming in, I'll just like to quickly point out the other scenarios. The other scenarios is that this thing is in a sideways correction, possibly a triangle or a complex, in which case it is not really very viable to suggest a possible direction for this market, right? The main thing which I would like to discuss as the secondary scenario, other than this diagonal formation, is that it could be a triangle, right? In which case you can see movement not breaking the low but remaining within the trend. If it really is a triangle, then we should not see a break of 35,400-ish level. So basically around here you can place your alerts around 35,400-ish levels. Break below it, we will be supporting the bearish counts. Otherwise, it is possibly in the triangle formation, which you guys already know is how it goes, the five waves of the triangle A, B, C, D, and E. It would be in the D wave formation from what we can see so far. So let me just have a quick look at the comments over here. Is there any ratio for a wave 5 down? Yes, for wave 5 down or up, you can just measure the wave 1 and project it from the end of wave 3. Sorry, the end of wave 4. That's one ratio for wave 5. That means basically equality between 5 and 1. Generally, you apply it when the third is extended. So that's the most common ratio we use. So Russia has been accumulating huge amounts of gold, silver over the last few years. Hmm. Didn't know that. Okay, so that's the situation with Bitcoin. We have discussed the two main views, the main hypothesis, which is of the flat correction, and the second one, which is suggesting a triangle or sideways movement. We have discussed both of them as well as the activation points for these analysis. 35,400 for the downside, we will start to look for bearishness. For the upside, above the last high, which is around 46,000 at this point, we will start to look for bullishness. So if you guys are clear on this analysis, type in yes or clear. If not, then do put in the questions. I'll wait for a few seconds. So Anant Dhugama is asking, do you share your chart analysis? The charts I'm already sharing on the screen are the analysis. You can take a screenshot if you want. But no, the detailed analysis which I do update in my private Slack is reserved for the students only. I don't like to get comments from public or share my hard work in public like that. Okay, so I see clear written over here. A little less participation from TradingView this time. Let me quickly check if there is something on LinkedIn, and then we'll switch back to further charts. Okay, so switching back to further chart, we would like to have a quick look. Thank you, Art, for the feedback. We will like to have a quick look at Nifty because we have been following it for the very beginning of these webinars. Crude oil, gold, S&P, and Nifty is what I have followed for so many years. Nifty, if you look at it, is generally favoring or having the same analysis or similar analysis as to what S&P is having, right? So not much to explain here. We seem to be having a WXY corrective formation. If I hide all the clutter on the screen, you can say this is the W complete, this is the X complete, and the Y is also possibly complete because the Y is supposed to have three waves in it, and you can say this is an A, B, and C. B being a triangle in this case, right? And let me just draw the triangle as well for you guys, just for the sake of simplicity. So this will be your A, this will be your B, this will be your C. The whole leg is complete. But that's just one argument in the favor of the bulls, right? For whatever reason, the lag seems to be reducing now. Oh, it's back. So again, so this is the first view that the W is complete, X is complete, and Y is complete, and that would suggest more upside is to follow. But something tells me that this is not the count we should be very happy about. And the reason is this big, huge gap down move. The triangle being complete does not really mean that the market will fall that much, right? This big move generally means that there is something bigger going on. So the secondary possibility, which I believe that could be happening on this particular chart of Nifty 50, is that this X is still continuing, and it is continuing possibly as a complex formation of or a flat or whatever, right? But basically what it means is that we can see some upside movement only to be followed by more down leg, in which case the counts will be rearranged something like this, right? So as I said, we will remain cautionary. Also, given the international condition, bearish move further is not something out of the question. So again, Nifty similar to S&P, both views are valid. The bearish view is not out of the question, specifically given this big gap down movement. It is definitely not out of the question, right? But a small up move is definitely possible. So what can we do here is we can plan strategically, like enter positions or activate positions around 16450 levels for the bearish side, right? And we can also monitor the move which is going in the upward direction, see the strength of this move, compare it with other relative factors, and plan accordingly. This is something we will have to look as we go further. I will not comment on the actual direction, but as far as my personal view is concerned, I am staying on the more on the bearish party here, at least on this chart. So that's the quick look on Nifty 50 here. Let me know if there is any comment. We have basically discussed all the main charts which we came to discuss, and it's also hit occurred to me that we have hit the 45 minutes mark. Art, David, Rashid, do let me know if you guys are clear by typing in clear, and any questions also should be posted in the comment section. I will have a look at them now. Yes, Anshul, what is the question on Nifty? David, is volatility means wild swings in each direction? Yes, David, volatility definitely would suggest wild swings in each direction, and we are already seeing volatility here. As a matter of fact, okay, I would have liked to load the volatility index here, but as I said, the system is lagging already a lot. But it has broken the range. If you will check the volatility index on your own charts, the range has been broken. So it's itself indicating volatility is high, like literally. My pleasure, Art. So what's the question from Anshul? I have not seen anything from you, Anshul. If you have typed in, okay, there it is. WXY is A, then triangle B, and does move in C. WXY is never A. That breaks the basic rule of nomenclature, right? You need to understand how degrees behave. A wave A is a zigzag, right? Not a WXY. A WXY itself means that a W is a zigzag inside it. So the question itself is incorrect, Anshul. So if there is any further question, I am still here, and in the middle I like to do some, as I would say in clear words, some marketing. So again, for those of you who do not know, I hold a track record of 80% plus for now 6 years straight: 2020, 2021, 2019, 18, 17, 16. 6 years. It's all public. Anybody can click on these links and check the YouTube videos, etc., etc. And my students have been nice enough to compile the whole thing. Although it looks like while uploading there an error has been made, and the 2021 record is not marked correctly, and the 2020 record is posted in its place. I will correct it within the day. But we have now a 6 year public track record, which is, I believe, completely outstanding, right? Building on top of that, the second thing I want to point out is that if you guys are interested in learning from someone like me who has an uh, provable track record and everything, you can contact me for the training program, and details for the next batch will be delivered on request basis. You can contact me via this contact form on 50is.com/trading-program-lt. Just fill out this form and arrange a meeting with me, and I'll see if we can go forward or not. These batches are limited, and the number of people also are very small. In We work with 3 to 5 people per batch. And I have a video course, 50s.com/Elliott Wave course. You can always go through it and check the videos. And lastly, I have been saying I'm working on a book. I'm working on a book. It is complete already. I just have to edit the last 2 chapters, 2 or 3 chapters, I believe. And I will then send it to some of the people I've been working with in the industry and get their feedback and publish it. I'm thinking of going on the electronic medium of Kindle. The book is not very big. It is, as a matter of fact, very, very small, but it is to the point, and I have only discussed the main concept, which is how to think applying the concepts of Elliott Wave on the market. So it is solving a practical problem in my eyes. I could have written a lot of things. Just to talk a little bit about the book, I had written 8 straight chapters first, discussing charts of 8 different trades I had taken. But then it occurred to me that it will then become some another book which has like 256 pages long, and these days people don't have time like that. So I picked up one among these 8 chapters, and then I expanded on it. I pick up basically the most complex analysis among those 8 chapters, and I have just expanded on that one trade. With with that one trade, I have written the whole book. And the idea is not to teach the basics of Elliott Wave, but it is to how to apply Elliott Wave for someone who knows the basics. So it is for professional traders basically. Lot of basic books are written by random people all around the world. I don't want to get into that market. So it will be out soon. I hope I get the time. I've been running very busy with these trades, specifically the because of the volatility. I've been getting a huge wins. Literally, one of the trades went to what do you call 100, no, sorry, 1000% gains on one of the option trades I was doing the other day. The day when the war broke between Russia and Ukraine, there was one trade which literally gave 1000% return. So maybe we can discuss it some other time. But volatility, a lot of opportunities, and I'm just not getting the time to complete it. In case you want to get updated as soon as I'm done with the book, subscribe to the emailing list. That's the only thing I use to communicate. I'm not big on Twitter and whatnot. Any random guy can come in, but if you are serious, you will subscribe to the mailing list, and I'll send a email, the oldest of the communication mediums. That's my way of doing things over here. So believe everything is done. It was a good webinar. I hope there was not too much lag in the recording. I seem to have a few more questions. Let me just quickly go over them. So yes, we have discussed Nifty already with Han Dugar, and he's saying screen is hazy. I will like before you guys leave to let me know how was the screen situation. Was there too many delays, or was the stream okay? Please put it in clear words on whichever platform you are viewing, and I will use it as feedback for further webinars. And most important among everything is that this webinar spreads. Lately, I have seen that the webinars are not even getting 1,000 views, which was previously they used to get 1,000 to 2,000 views like nothing. So it is in the hands of you people to share the link, email it, whatever you can do to increase the views. If there are no views, then there is no motivation to continue doing these things, right? So that's my humble request here. Definitely promote the recording once it is available on YouTube. Everybody, Art, Anand, Vidhan, Anshul, David, and everybody else who has been present in this webinar on whichever platform they were, kindly share the link. If you want to share it on the platform you were on, that's fine. You can also share my website link. It will be uploaded on the website. So let me just quickly check if there's anything else. Yes, David, it is sounding good. Let's that piece breaks out soon and short breaks in sound. Yes, definitely. Okay, thank you, Anshul. Thank you, David. and Art and Dan and everybody else who joined in. I believe we should end this discussion now. And